My name doesn't matter.
I worked for the International Monetary Fund for 23 years. I specialized in sovereign debt restructuring, sub-Saharan Africa mostly. Countries that borrowed when commodity prices were high and then discovered what happens when commodity prices are not high.
I thought I understood how sovereign debt worked. I understood the part that was meant to be understood.
In March 2019, the Republic of Kambala came to us. Copper prices had collapsed. Their external debt service was consuming 41% of government revenue. They needed restructuring. This was not unusual. We do perhaps a dozen of these a year. The first step is always the same. You identify the creditors. You call them. You negotiate. Bondholders, bilateral lenders, commercial banks. Everyone sits down. Everyone knows who everyone else is.
That's how it works. That's how I thought it worked.
We sent the standard creditor identification request to Kambala's Ministry of Finance. They sent back the standard list: China Development Bank, African Development Bank, a consortium of European commercial lenders, some legacy bond issues trading in London. Clean, normal, the list you'd expect.
Then our compliance team ran the beneficial ownership trace. This is standard procedure, has been since 2016. You trace backwards through holding structures to identify who actually owns the debt. Not the shell companies, not the SPVs, the actual money.
3 names appeared that were not on Kambala's list.
Meridian Capital Partners, SA. Atlantic Sovereign Holdings, SA. Northern Bridge Investment Fund, SA. All registered in Luxembourg. All below the $500 million disclosure threshold that Kambala law required at the time. All perfectly legal. Collectively, they held $4.2 billion of Kambala's external debt. 34%. 34% of a nation's external debt, and the nation's Ministry of Finance did not know these entities existed. I called my colleague in Luxembourg. I asked him to trace beneficial ownership on the 3 entities. He called me back 6 hours later.
All 3 were wholly owned subsidiaries of the Al Rashid Investment Authority.
Al Rashid is a sovereign wealth fund, $340 billion under management. It operates under the direct authority of a Gulf state government. I can't tell you which one. The restructuring settlement included a non-disclosure agreement that applies to me personally, even though I no longer work for the fund. But you can look up which Gulf sovereign wealth funds have $340 billion under management. There aren't many. I went back through the transaction history. The purchases began in January 2014. Kambala had issued $8 billion in sovereign bonds the previous year. Copper prices were strong. The bonds were trading slightly above par. Normal investor base, European pension funds, American bond funds, some Chinese banks. Then the secondary market purchases started. Meridian bought $480 million in January 2014, just under the threshold. Atlantic bought $490 million in March 2014. Northern Bridge bought $470 million in July 2014.
Every purchase stayed below 500 million. Every purchase required no disclosure under Kambala law.
The purchases continued for 54 months.
January 2014 to November 2018. 23 separate transactions across 3 entities.
$4.2 billion.
34% of Kambala's total external debt.
Bought quietly, legally, on the secondary market by a sovereign wealth fund acting on behalf of a foreign government. And Kambala had no idea. I printed the transaction history. I brought it to my section chief. I said, "Did you know sovereign wealth funds were doing this?" She looked at the papers for maybe 90 seconds. Then she looked at me. She said, "Doing what?" I said, "Acquiring voting stakes in other countries' debt without disclosure." She said, "It's a secondary market purchase. It's legal." I said, "But they're not a commercial creditor. They're a state actor buying another state's debt through shell companies."
She said, "Do you have evidence that any law was broken?" I did not. We proceeded with the restructuring. This is what we do. A country cannot pay. We negotiate. We extend maturities. We reduce interest rates. We create space for the country to grow its way out. But restructuring only works if the creditors agree.
All of them. The European commercial banks agreed immediately. They always do. They want the debt off their books. They'll take 70 cents on the dollar and move on.
The Chinese took longer. They always take longer, but they agreed. Restructuring is better than default. They know this.
Then we called Al-Rashid. They did not agree.
They had terms.
They would accept the maturity extension. They would accept the interest rate reduction. But they wanted binding covenants attached to Kambala's national budget. Specifically, any budget expenditure above $50 million in the categories of defence, infrastructure or resource extraction would require pre-approval from a creditor committee.
The creditor committee would have 3 members.
Al-Rashid would appoint all 3. I said to my section chief, "That's not debt restructuring, that's fiscal occupation." She said, "It's a creditor protection covenant. They're common in distressed situations." I said, "For corporate debt, not sovereign debt, you can't put a creditor committee inside a country's budget process." She said, "Do you have a legal basis for that position?" I did not. The covenant was written into the restructuring agreement. Duration, 11 years. Effective date, April 2019.
Kambala's Minister of Finance signed it. He had no choice. The alternative was default. Default meant no access to international credit markets. No credit access meant no ability to import food. Kambala imports 60% of its staple grain.
So he signed. I asked him later, this was off the record, we were having drinks at a reception in Lusaka. I asked him, "Did you know that a foreign sovereign wealth fund owned a third of your debt?" He looked at me. He said, "How would I know? They bought it on the secondary market. We're not notified of secondary market transactions. That's the whole point of a secondary market."
I said, "But doesn't that worry you, that you don't know who owns your debt?"
He said, "I know now." I went back and looked at the trading data. I wanted to understand the pattern. Why these purchases? Why this country? Why this particular 54-month window? 2 things became clear.
First, Al-Rashid only bought during price dips. When copper prices dropped and the bonds sold off, Al-Rashid bought. They never chased. They waited. Disciplined, patient. They bought distress.
Second, they stopped buying in November 2018.
Copper prices crashed in December 2018.
They stopped buying 1 month before the crash. Not 2 months, not 3 months. 1 month. I checked the commodity markets. In November 2018, copper futures were trading at $2.81 per pound. By March 2019, they were at $2.87. Prices were rising, not falling. Al-Rashid stopped buying when prices looked strong.
Then prices collapsed.
Then Kambala came to us for restructuring. Then Al-Rashid revealed itself as the largest single creditor. Then Al-Rashid inserted budget covenants that gave it veto power over Kambala's national spending decisions. I don't trade commodities. I'm not qualified to comment on price movements. I'm telling you what the data shows, that's all. What the data shows. I asked my section chief, should we flag this for the board?
She said, "Flag what?"
I said, the ownership structure, the timing of the purchases, the covenant terms. She said, you want to flag a legal secondary market purchase of sovereign debt by an institutional investor? I said, they're not an institutional investor, they're a state actor. She said, every sovereign wealth fund is a state actor, that's what the word sovereign means. Should we flag Norway's fund too, Singapore's? I didn't flag it. 3 months after the restructuring closed, Kambala's government announced a new deep water port project, $1.8 billion, financed by the same Gulf state that owns Al-Rashid.
The port is on Kambala's eastern coast, direct access to the Indian Ocean.
Kambala is landlocked. It has no eastern coast. It has an eastern coast now. They annexed a 40-kilometre coastal corridor from the neighbouring country through a bilateral treaty signed in June 2019, 2 months after the restructuring. The corridor gives Kambala sea access. The port will be built there. The neighbouring country agreed to the annexation in exchange for debt relief.
The debt relief was financed by the same Gulf state. The port construction contract went to a consortium. 3 companies, one is Gulf-owned, one is Chinese, one is registered in Kambala, but the beneficial ownership trace leads back to a holding company in the Gulf state.
The port will include a naval berthing facility.
Kambala has no navy.
The Gulf state has a navy.
I retired from the IMF in August 2020.
I teach now, sovereign debt management, graduate level. I have 16 students this semester. I tell them this story. I tell them about Meridian and Atlantic and Northern Bridge. I tell them about the 4.2 billion and the 54 months and the 34%.
I tell them about the covenant.
I tell them about the port.
Every time I tell it, I check.
I go back to the transaction records. I go back to the restructuring agreement. I go back to the bilateral treaty. I read every document again. Every time I check to see if something was illegal.
Every time, nothing was. One of my students asked me last month, if it was legal, why does it bother you?
I didn't have an answer. I should have. I've been thinking about it for 4 years, but I didn't have an answer. I think what bothers me is this. For 23 years I worked in sovereign debt. I thought I understood the system, borrowers and lenders, risk and return. Countries borrow when they need capital. Investors lend when they want yield. Sometimes countries can't pay. We restructure. We negotiate. We find terms that work. That's the system. But in that system, everyone knows who everyone else is.
The borrower knows the lender.
The lender knows what they're buying. What I saw in Kambala was different. The borrower did not know the lender. The lender knew exactly what they were buying. And what they were buying was not yield.
You can buy a lot of things with $4.2 billion.
You can buy bonds. You can buy influence. You can buy covenants. You can buy a coastal corridor. You can buy a port. You can buy berthing rights for your navy in an ocean you don't touch.
For $4.2 billion, you can buy a lot of things.
If you're patient. If you're disciplined. If you wait for the right 54 months.
My student asked me, if it was legal, why does it bother you?
I think it bothers me because I spent 23 years believing that sovereign debt was a financial instrument. I was wrong. It's a territorial instrument. It always was. I just didn't understand whose territory it was buying. The restructuring agreement expires in 2030. The port opens in 2027. The naval berthing facility is already operational. I check the news from Kambala every few months.
2 weeks ago, their Minister of Finance gave a speech at an African Union summit. He talked about debt sustainability. He talked about the importance of creditor transparency. He talked about the need for multilateral frameworks that protect borrower sovereignty.
I watched the video. He looked tired. After the speech, a reporter asked him, "Do you regret signing the 2019 restructuring agreement?" He said, "We had no choice." The reporter said, "But you signed covenants that give foreign creditors control over your national budget." He said, "We had no choice." Then he walked off stage. I tell my students, when you look at a sovereign bond, you're not looking at debt. You're looking at someone's future capacity to say no. And if you buy enough of those bonds, quietly enough, patiently enough, legally enough, you're not buying the yield on their future. You're buying the future itself.
That's what I saw in Kambala.
That's what bothers me. Every time I check, it was legal. Every time. I was in Geneva when the final restructuring documents came through.
January 2019, 6 a.m.
I'd been awake for 31 hours. The Kambala delegation had been in the conference room since midnight, going through page 742, the collateral schedules. Their lead negotiator was a woman named Grace Amondi, Oxford educated, brilliant. She'd worked at the Bank of England before returning home.
I respected her. At 6:15, she came to my office.
She didn't knock. She put a folder on my desk. She said, "Tell me what I'm missing." I opened it. She'd done what I'd done, traced the ownership chains, the shell companies, the layered vehicles, the beneficial ownership structures behind the bondholders who were refusing to take haircuts. She'd gotten further than I had. There was a chart. 37 entities, registered in 12 jurisdictions, connected by lines showing capital flows, management contracts, shared directors. At the centre, a name I hadn't seen before. Meridian Strategic Infrastructure Fund. Incorporated in Luxembourg, managed from Singapore. Capital flows from, she'd traced it back through 6 layers. Sovereign Wealth Fund, major Asian economy. I looked up at her. She said, "They own 42% of our external debt." I said, "That can't be right." She said, "Check." I spent the next 4 hours checking. She was right. But it was worse than 42%. Because the restructuring agreement we were negotiating didn't just cover existing debt, it established the framework for all future borrowing, the covenants, the cross-default clauses, the dispute resolution mechanisms, and buried in the creditor consent requirements.
Section 14.7, subsection C.
Any creditor holding more than 35% of restructured obligations could block future amendments to fiscal policy provisions without their explicit consent.
I called our legal team.
I said, "This gives a single creditor veto power over their budget." The lawyer said, "Only if one creditor holds more than 35%. I said, "One creditor does." He said, "According to our records, the debt is held by 37 separate entities."
I said, trace the beneficial ownership.
He said, "We don't have jurisdiction to demand that disclosure. These are private creditors. If Kambala wants to investigate their bondholders' corporate structures, that's their sovereign right. But they're here asking us to mediate the restructuring." I said, "So we're facilitating an agreement that could give a foreign government control over their fiscal policy, and we're not allowed to ask whether that's happening." He said, "We're facilitating an agreement between a sovereign borrower and its creditors. The identity of beneficial owners is not our mandate." Then he said, "Besides, even if what you're suggesting is true, the alternative is default."
Do you know what happens to their economy if they default?
I went back to Grace. It was almost noon.
She was sitting in the conference room, alone. The rest of her delegation was sleeping in shifts at a hotel 2 blocks away.
I sat down across from her. I said, "You can't sign this."
She said, "I know."
I said, "If you default..." She said, "We lose access to international capital markets. Our currency collapses. We can't import fuel. We can't import food. We have 18 million people. 6 million are food insecure already. Default means famine." I said, "If you sign..." She said, "I know what it means."
She looked at the papers spread across the table.
789 pages. She said, "I've been reading section 14.7 for 6 hours."
Trying to find the loophole.
I said, "There isn't one." She said, "I know."
She said, in 2015, when we took the first loan from the Meridian Fund, it was for a port expansion, Kambala City, modern container facilities. They said it would triple our trade capacity.
The terms were good, better than the World Bank, better than the Paris Club lenders.
4.2% interest, 20-year maturity, 5-year grace period.
My predecessor signed it the same day. In 2016 they offered financing for the highway to the port, $2 billion, same terms.
In 2017, power grid upgrades, 1.4 billion.
In 2018 the naval facility, they said it was for Coast Guard operations, anti-piracy, search and rescue capacity. 800 million.
Each loan individually looked reasonable. Each time they were outbidding other lenders. Each time the money arrived on time, no conditionality, no policy reforms required.
She said, by the time I took over in 2018, we'd borrowed 8.6 billion from Meridian-linked entities. Nobody had noticed they were linked.
Different names, different lawyers, different intermediary banks.
I only noticed because I started tracking the technical advisors. Same firm kept showing up, infrastructure consulting company, Singapore-based. They were on every project, always as a contractual requirement from the lender.
I started asking questions. That's when commodity prices dropped.
Copper, cobalt are two main exports. That's when the grace periods ended. That's when the debt service obligations hit our budget like a freight train. She looked at me. She said, they knew the commodity cycle, they had to know. They lent us $8 billion at the peak of the market. They structured the grace periods to end exactly when the bust would hit. I said, you can't prove intent.
She said, I don't have to prove it, I just have to live with it.
At 2 p.m. her president called. I wasn't on the call, but I was in the room. She listened for 7 minutes. She said, yes, Mr. President. She said, I understand, Mr. President. She said, no, Mr. President, there is no alternative. She hung up. She looked at the restructuring agreement.
She signed page 789.
Her hand was shaking.
After she left, I stayed in that conference room for 3 hours. Just sitting there.
Looking at those documents. I kept thinking this is legal. Every single step was legal. The loans were legal.
The ownership structures were legal.
The restructuring terms were legal. The creditor consent thresholds were legal. You could teach this as a case study in international finance. Every element followed best practices. Except when you put it all together.
When you stepped back and looked at what had been constructed.
It was a mechanism. Precise, patient, lawful. A mechanism for transferring sovereignty. I wrote a memo.
23 pages.
I outlined everything Grace had found, everything I'd verified.
I sent it to my director.
I got called into his office the next morning. He said, this memo cannot leave this building. I said, people need to know. He said, know what? That a borrower took loans it couldn't repay. That's not news. That a creditor structured its holdings through multiple vehicles. That's legal. That a restructuring agreement includes creditor consent provisions. That's standard. He said, you're writing a conspiracy theory about a debt restructuring. I said, I'm documenting a pattern. He said, you're documenting coincidences and calling them a pattern because the borrower is African and the creditor is Asian. That stopped me. Because maybe he was right. Maybe I was seeing patterns that weren't there. Maybe this was just how sovereign debt worked and I'd been naive. I went home. I didn't send the memo anywhere else.
but I kept the file.
And I kept checking.
In 2020, Kambala tried to increase education spending.
The creditor committee blocked it, section 14(7). Cited debt sustainability concerns. The education budget was cut by 18%. In 2021, they tried to restructure their mining revenue contracts. Foreign investors threatened arbitration. Cited the fiscal stability provisions in the 2019 agreement. The restructuring was abandoned. In 2023, they needed emergency drought relief funding.
The creditor committee approved it, with conditions.
The port operating agreement was amended. 99-year lease, transferred management to a Meridian subsidiary. In 2024, their Minister of Defence resigned. No public explanation. I have a friend in their foreign ministry. He told me, off the record, the minister found out the naval facility wasn't being used by their Coast Guard anymore.
Different ships were docking there. When he tried to inspect, he was told the facility was under private management contract.
He tried to cancel the contract. He was told it was collateralized under the debt agreement.
Cancellation would trigger cross-default clauses.
That's when I understood. This wasn't about the money.
It was never about the money.
The debt was just the structure,
The instrument.
the legal architecture that made everything else possible. And we, the IMF, the international financial system, the whole apparatus of sovereign debt management,
We were the legitimacy mechanism.
by mediating the restructuring, we made it official. We made it normal.
We made it legal. I retired in 2025.
I teach now. International finance, sovereign debt, restructuring frameworks. I tell my students the Kambala story. Not all of it.
Just the parts that are in the public record.
I tell them, this is legal. I tell them, this is how the system works. I tell them, this will happen again.
Some of them ask, what could Kambala have done differently?
I don't have an answer. Because the truth is, once you need the money, once your people are hungry, once default means collapse, you've already lost. The negotiation is just the paperwork.